Hello traders and welcome to another video review. Today is Tuesday, May 23rd, 2023. Let's find out what's going on the Forex economic calendar today. No very important data had been released overnight, but today during the London session we have a very important data scheduled for release. First, German manufacturing PMI is scheduled for release 9:30. As you can see, the forecast is 45 points and the previous reading was 44.5. So the market expects a jump in German manufacturing PMI. Composite PMI, manufacturing PMI and services PMI data from the UK are scheduled for release at 10:30. And this is a mixed bag of data, as you can see, so it's better to keep an eye on this data release to see the market reaction, of course. Bank of England Governor Bailey will give a speech 11:15, and then we jump to the New York session. Building permits data are scheduled for release at 2 o'clock, and new home sales data are scheduled for release at 4 o'clock. So pretty intense day, especially if you take into the consideration the PMI data from the UK. So we will definitely take a look at the British pound today, but first let's find out what's going on the euro dollar. Euro dollar for our chart is looking again very bearish. The momentum didn't have actually chance to break above the level of 50. The highest level it was 48 points during this bounce from the lows around the level of 1.0760. As you can see, market had been consolidating in this very narrow range just under the key short-term technical resistance located at 1.0846 and below the 50 periods moving average seen right now at 1.0850. The market is trying to stay in this consolidation zone, kind of a narrow consolidation zone. However, it looks like bears are just waiting for the trigger to continue the down move. Only a sustained breakout above this level here, the technical resistance, would change the short-term outlook for more bullish, and maybe the bulls would be able to test this high from the May 16th located at 1.0905 before the downside reversal. So the euro looking bearish. We are waiting for the trigger to push the market lower. British pound for our chart, as you can see, still trading below the 50 and 100 periods moving averages. The horizontal line can be seen at the level of 1.2343. This is of course the technical resistance. The other technical resistance is still available at 1.2352, and the last one is seen at 1.2366. So this is the key technical support zone or demand zone. We are still moving lower. Just recently we got a bearish cross, 50 periods moving average moving below the 100 periods moving average. So for now we are waiting for the market to trigger the down move. Momentum is below the level of 50. It's clearly being rejected once, second time, and the third, fourth and fifth time from the level of 50, which is the neutral level. So bears are in control of this market, and only a sustained breakout above this level here, the level of the technical resistance, somewhere around, let me just take the magnet, somewhere around 1.2545 would change the short-term outlook to more bullish. So no breakout, no change of the scenario. We are looking for more downside on the British pound. Local support 1.2391, very close to this demand zone. So any breakout lower and a new low for this week would likely extend the drop towards the support zone. So that was the British pound. Let's take a look at gold market. What do we have here? Very interesting situation, because we have the cross of 50 and 100 periods moving averages on a 4-hour chart. Momentum was rejected from the level of 50 again. So it looks like we are still moving lower from this highs of $2,080. The key technical support, maybe the key short-term technical support, 1951. Okay, but there is still some of the technical supports made from the horizontal movement. Horizontal technical supports, which are on the level of 1933, 1943. So that's the $10 higher, and the third one, very close to the current one, is 1949. So those three technical supports here. If we extend the line, we have the demand zone. The technical resistance, of course, can be seen. So there's the support. Let me just copy this. Technical resistance is, of course, at the level of 1983. And let's just identify the game-changing level. That might be kind of interesting to see where is that game-changing level for the bulls. So any breakout above the technical resistance. So let me just take the different line. So we got the two technical resistance levels. This is the first one. So any breakout above the level of 1999, so roughly $2,000, is a game changer. And then the confirmation comes with breakout above 2021, and then above the 2047. So those technical resistance levels are key resistances to be broken in a case of a bearish, in a case of a bullish rally. So the bears will be, of course, defeated for now. However, bears are in full control of the market. Bounces are shallow. They can't even get towards past the level of 50 points on the RSI, which means that momentum is still negative. The sentiment is still negative on the gold market, and we should be looking for another extension to the downside for this market. Targets are on the screen right now. So last but not least, let's take a look what's going on the Bitcoin market. So the Bitcoin is, as you can see, trading in a horizontal zone. Top level here, 27,667, of course. Let me just copy one more level for you. The lower range level is 26,360. One local technical resistance, which is being tested right now, 4,095. So this is the technical resistance, and basically the market participants await the breakout to the upside or to the downside. Recently we got this nice movement in the momentum. Let me just mark the technical support. This breakout to the upside in the momentum above the level of 50, above the level of 60 points. So right now it's 63 because of this movement. Higher we are testing the local technical resistance. We are testing the 100 periods moving averages. Next target is 27,667, and then eventually we might point out another target, which is somewhere here, 28,325. That might be that might be considered as the next target for the Bitcoin bulls. Now, if this level is violated, then of course the market will trade above both of the moving averages. So the chances for the rally extension are in that situation higher. Nevertheless, the key technical resistance, as you can see, that's been tested many times on the Bitcoin, is still located between 30,000 and just below it, like 29,968 and 29,000. 9,857. So if there is no breakout, it's clearly visible if we zoom out. If there is no breakout above this zone here, we cannot say that the Bitcoin is reversing. Okay, it looks good for the reversal judging by this candle, but the period of this slow horizontal price action doesn't actually means the bulls are ready for another jump to the upside. So if today we will continue the movement up, we break above the short-term technical resistance, above the another technical resistance, then of course the chances will increase. However, if we zoom out again, we can see that we really need very strong V-shaped reversal and breakout above these red lines in order to ensure another leg to the upside in the midterm on the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.